It is week 77 of Economic Chat. Let's Talk Business with Mr. Daniel Steinman. A warm welcome to our listeners and a warm welcome to Mr. Daniel Steinman. It feels like we have not, had a conversation in a long time. I don't know what happened
it's
in
true,
between.
Elsie. When I blink twice, the week's gone.
Ne?
Yeah.
I do agree with you as well. But we've had quite an interesting conversation the last time we were here. But today we're going to talk about something very interesting as well.
More academic.
It's always interesting, but yeah, definitely more academic. And I'm going to keep quiet today because I want to learn more today. And we are talking about foreign reserves. Let's start off with, just telling the listeners, when we talk about foreign reserves, what is it?
Let's begin with the definition.
Yeah.
Then we know what we've got on the table. Then we can see whether we are all on the same page.
Yes.
So a foreign reserve is it's like a nest egg. It's savings, and it you call it's sovereign savings, meaning it's savings by the government.
Yeah.
So it is the government of the Republic of Namibia. They have accounts in foreign currency. Mostly, I would assume in our case, about 80 to 85% in US dollar, and a very limited amount in Chinese renminbi, but also in euro and then in South African rand.
Yeah.
Those are basically the currencies that you would typically find in a basket of our foreign reserves, although the vast majority is determined by the US dollar and by its value. So a foreign reserve account can be offshore. It means it can be in the name of the sovereign, the Republic of Namibia, who has accounts at various institutions in Europe or America or in China, or it can be part of the reserves that you maintain with the International Monetary Fund, or it can be onshore accounts, meaning in your own territory, in your own jurisdiction, but then denominated in any one of those currencies that I've mentioned. So it shows you that it's not a static concept. There's a large measure of flexibility in the way that you constitute your foreign reserve holdings, and in the way that you quantify them, which is what in the end is the important thing. Because like with any savings, if you and I go to a financial broker and we say, listen, we are very poor, but we realize we need to save. We want to put 200 Namibia dollar per month away in some savings account. Now immediately you will know you've got a few options. You can go open a savings account at the bank, on which you will earn absolutely almost nothing in terms of interest. The money will just sit there. As a matter of fact, the bank will levy all sorts of charges that depletes the little interest that you will that you will gain. So it's not a good investment, but it's an investment. Or you can go to any one of the big institutional financial institutions, and you can take out a unit trust. There your modest monthly contribution, as long as you just forget about it, you must just contribute every month that small amount, and you must forget about it for 5 or 10 or 15 or 20 years. And then eventually one day when you bother to open that envelope that is the statement, and you look at it and you say, there's $100,000 in this account, That is good returns. But it is a way that you build your own type of reserves. You see, so it's much the same thing with a government. The foreign reserves are the combined or the accumulated reserves in foreign denomination or denominated currencies, either onshore or offshore, that you basically don't touch unless you are in very dire straits. So the whole idea, it's a nest egg, it's a form of sovereign saving, and you must forget about it. You must handle it like you and I would handle our own small little unit trust contribution. You must forget about it. So what has been happening, as always, I think maybe we should take a short break here, because I don't want to go over to the history of our foreign reserves. That I want to reserve for the middle part of our conversation, if that is fine with you.
The most important part of the conversation is always the middle part. But of course, we can go to a short break.
The reason why I'm suggesting that is because there was a time, not so long ago, we're talking about 2016, 2017,
during recession,
where our foreign reserves were really dismal. And then we brought a certain discipline to it, and today they are excellent. So in the second part, I want to focus a bit on the history.
Okay. Let's go for the short break.